Hello everyone, a very good evening. Welcome to Oliveboard. I am Anshul, your CAIIB mentor, and this is the demo class for your CAIIB MCQs cracker batch that is starting from today. So we have already completed our crash batch. We have revised all the important topics, everything. Now this is the second part of our strategy to qualify our exam. We need to have the conceptual clarity. At the same time, we need to practice all the important questions that are following the difficulty level, the exam pattern, so that we have an idea of which type of questions are asked. Practice is very important. So today, this is the demo class. We'll be discussing about what will be our strategy in the cracker batch, which type of questions are asked, the basic things. And then from tomorrow, daily at 9 p.m., we'll be having our cracker sessions in which we'll be going module wise, unit wise, practicing in the live class all the possible MCQs, case studies, statement based questions, true false questions, everything. All right. So, if we talk about the basics about our BRBL paper, there are four modules, right? Module A, which is regulations and compliance, basically two acts, the Banking Regulation Act and the RBI Act, are covered. NBFCs, the financial sector reforms, what is the role of RBI, how the Banking Regulation Act controls the banking system, the role of government in the acquisitions, mergers, amalgamations. Then we have module B, the important acts and laws related to the banking operations. So the Prevention of Money Laundering Act, FEMA Act, the Payment and Settlement Systems Act, Negotiable Instruments Act, these are there. Module C is extremely important. The acts like SARFAESI Act, IBC, the RDB, the Integrated Ombudsman Scheme, all of these are there in the Module C. And Module D is the Commercial Acts. That is Companies Act, Limited Liability Partnership Act. We'll be studying about the meaning of partnership, the various types of contracts, the contract of sale. If we talk about the priority weightage, highest weightage is there of module D, factual questions as well as case study based questions. Then we have module C. Both module D and module C together have around 65 to 70% weightage. Then module B, you can expect around 20 mark questions, and module A from 10 to 15 mark questions from module A. Module A is completely theoretical, factual questions. All right, module B is simple, but it is very important and it is scoring as well. All right, so this is the weightage. If we talk about the types of questions asked, you'll be having the fact-based MCQs. Directly, the institute will ask you, let's say, an NBFC with an asset size of such and such characteristic will be placed in which layer according to the regulatory scale-based framework, in the base layer, middle layer, upper layer, or top layer. So you'll be given options, four or five options, direct fact-based MCQs. Multiple selection questions, you'll be given statements like which of the following is true about the amalgamations of two institutes, two companies. You'll be given four or five statements. You need to select which of the following statements are correct, 1, 2, and 3, 2, 3, and 4, and so on. And then you will have case study or scenario based questions as well. This holds the highest weightage, and this is where we can get, or we can score, or we can lose marks, because the case studies are 2 mark questions. If we get it right directly, our marks will increase. Okay, so case study scenario based questions are also conceptual. If you have the conceptual clarity, you can answer them correctly, but it will take time for you to comprehend what is being asked. That is why we need to practice case studies as well. So these are the basic things. Now, in this particular cracker batch, what are we going to do? In the live sessions daily at 9 p.m., we will have questions like we do on the YouTube sessions, right? But YouTube sessions, we practice more questions, more in quantity. Here, we'll be practicing the quality questions in the sense that questions along with the explanation, detailed explanation, how to approach the case studies, how to approach the multiple selection questions. So we'll be practicing them in live sessions. Okay, you already have studied the whole syllabus. Now you need to practice as many questions as possible, and this is what we are going to do. So till here, I hope everything is clear. All right. Okay. Now let us start with the questions. This is the demo. So I'll be giving you a brief introduction and idea about the type of questions that we are going to discuss in our live cracker batch. Like, answer this question. Identify which of the following statements are correct. Banks must accept deposits only in the form of money, not valuables. Deposits accepted by the banks must always be repayable on demand. KYC norms enable the government to open zero balance account. Under certain conditions, individuals may be prohibited from using the words bank in their first name. So this question is easy. You'll get the answer easily if you remember the things that we have studied in our module A in the first unit. What is the definition of a bank defined under section 5B of our Banking Regulation Act? Any company involved in accepting deposits, giving advances, deposits which are repayable on demand. But are they always repayable in demand? No. We also have fixed or term deposit. So the second statement will be incorrect. Again, the KYC norms help the RBI and the banks to know the customer identification, protect the banks from frauds, monitoring the transactions of suspicious nature, preventing money laundering. All right. So the correct answer should be 1 and 4. And along with the questions, along with the answer, you will also get the explanation for your revision. All right. So these are the multiple statement questions. They seem lengthy, they seem tough, but if you go through the statements very carefully and if you have understood the concepts, obviously you'll get it right. Okay, so the correct answer is 1 and 4. All right. Then fact-based questions are also there. Direct fact-based questions. Which of the following matters can an aggrieved banking company appeal to the central government? So if let's say RBI has taken a decision against the banking company, right? Like they have ordered to remove a director or they have prohibited the banking company for conducting any business, or let's say RBI has imposed some penalties on the banking company. So certain powers are given to the central government to regulate the banking companies, the banking sector, the financial system. Mostly it is the role of RBI. But some limited exceptional powers have been given to our central government as well. Government as a regulator of the bank. This is under section 7(1). All right. Section 7(1), where government can give directions to RBI wherever considered necessary. Other than that, a few areas where the power lies with the government, like if a banking company's license has been cancelled, they can make an appeal to the RBI, to the government. If a banking company's license has been cancelled, or the RBI has ordered to remove a managerial personnel of the bank, or certain operations have been suspended by RBI, that appeal can also be made. Okay, so the correct answer here will be option B, cancellation of license under section 22. Other than that, the powers have been given to the central government to give directions to RBI. These powers, however, are to be rarely used. Only once they have been used, in October 2018, where to the RBI governor letters were sent regarding the liquidity of NBFCs, capital requirement for the weak banks, lending to the SMEs. All right. So these are the things. So like this, the questions will be asked. Then scenario based, case study based questions are also there in your exam. This scenario says there's a bank, Prudence Bank, under a 4-month court granted moratorium is found to be operating in a manner that could harm the depositors' interests according to RBI's internal audit. What action can RBI take and what happens to the moratorium? Moratorium means a stay. So let's say order was passed by the court that the bank will be wound up. But the bank applied to the court saying that we need a holiday period so that we can correct our actions. If during that holiday period the scenario is saying that they conducted something, they did something that would harm the depositors. So, what action can RBI take? RBI can direct the bank to restructure itself without informing the court. RBI can apply to the High Court for winding up, and the moratorium cannot be extended any further. RBI has no authority during a valid court granted moratorium, or the court must wait until the full 6 months to consider winding up. So, if let's say they accepted deposits in a manner that could harm the depositors, or they gave out loans that could harm the depositors, in this case will apply to the High Court to start the winding up process, and after receiving this the High Court cannot extend the moratorium any further. It will be binding on the High Court. What constitutes an offense under Section 138 of the Negotiable Instrument Act? So, in the Negotiable Instrument Act, Module B, certain sections are very important. Section 138 was there earlier also. Section 138 basically deals with the dishonor of a check, right? How the penalty is imposed. Section 143A and section 148, which talks about the interim compensation that will be payable. These have been included after an amendment that was made in 2018. All right. So, what is section 138 about? The check is returned due to insufficient funds in the account. Check is presented after 6 months from the date it was drawn. The check is returned due to the drawer's instructions. The check is presented within 3 months from the date. So, when the check is returned, dishonor. When the check has been dishonored, then section 138 arises. All right. So the person who dishonored the check will be punished with an imprisonment for a term that can be extended to 2 years, or with a fine that can be extended to twice the amount, or with both. Now, when we are talking about section 143A and section 148, if the drawer pleads not guilty, they say that there were sufficient funds in my account, the dishonor is incorrect, they can plead not guilty, but then first they have to make an interim compensation 20% of the check amount to the complainant. That is section 143A. If they want to make a further appeal is filed by the drawer against the conviction under section 138 to the appellate court. They need to deposit 20% of the total compensation awarded by the trial court. So these three sections are extremely important. Section 138, 143A, and 148. All right. Okay. Another case study, XYZ Private Limited, which is a fintech company, has developed an innovative payment gateway enabling instant cross border transactions. Eager to launch its operations, the company begins facilitating transactions among its users. However, upon scrutiny, the Reserve Bank of India notices that the company is operating without its authorization. The company argues that it qualifies under one of the Act's provisions for exemption. Now, RBI must decide whether they will allow to continue operations, or it will the or their operations must stop. Which of the following exemptions would not apply? So the company is saying that we are exempted. We are exempted, and it was legally appropriate that we could facilitate the transaction. The company is operating as an agent for another company to whom the payment is due. The company is accepting payments from its holding company or fellow subsidiaries. The company has obtained explicit exemption from RBI via notification. The company has developed innovative technology for payment processing. So, RBI's registration is important, compulsory for transaction, but certain exemptions are given. First three are valid exemption, but the fourth statement is not. Innovate, just because they have developed some innovative technology, they cannot continue without RBI's registration or RBI's authorization. All right, so this is also given under the Banking Regulation Act. The Banking Regulation Act, Section 5B says license for banking is important, right? Under the Section 22 of the Banking Regulation Act, to commence or carry on the business of banking, they have to first get a license from RBI, and they have to use the word bank or banker in its name. All right. Okay. Next question. Which statements are true about hypothecation as per the SARFAESI Act? See, other types of charges like a mortgage, a pledge, a lien, these are defined in the Transfer of Property Act. But hypothecation is defined in our SARFAESI Act. So, which statements are true? It includes a floating charge and crystallization of such charge into a fixed charge on movable property. It involves transferring the possession of the movable property to the creditor. It is a charge created by a borrower in favor of a secured creditor. It excludes any future movable property. So, which of the following statements are correct? What is hypothecation? When a charge is created on a movable property, yes, it is a floating charge, true. It will crystallize when the default occurs. Crystallization means now it will become a fixed charge. So movable good can be a vehicle, or it can be goods that are bought and sold on a daily basis, or machinery which is utilized by the borrower on their daily business. The only possible way to create a charge is hypothecation. It does not, however, exclude any future movable property. All right, because it is a floating charge, so it will be on all the property. And the second statement, it does not involve the transfer of possession. The possession remains with the debtor. They can continue to use the hypothecated property. So the correct answer should be A, 1 and 3. And again, each and everything is given here about hypothecation. Okay. Which of the following statements accurately describe the procedural framework of the initiation of a corporate insolvency resolution process by a financial creditor? The financial creditor may file an application for the initiation of CIRP even in respect of a default owed to another financial creditor. Is this statement true? Yes. In respect of any financial creditor under the section 7(1) of our IBC, the application can be filed. The second statement, for allottees in a real estate project, the minimum of 100 allottees or 10%, whichever is higher. No, whichever is less, either 100 or 10% of the total allottees, whichever is less, must file the application jointly. An application filed prior to 2020 amendment must be modified to comply with the joint filing within 30 days. Correct? A non-compliant application must be modified. But statement 4, the CIRP process begins from the date of filing the application. No, the date from the admission. The date in which the adjudicating authority, on which the adjudicating authority accepts the application, admits the application, from then the CIRP process is going to begin. Admission of the application, not the filing. Could be possible that the adjudicating authority says that the application is incomplete, provide some more information. So the day on which it is admitted, the CIRP is going to start. What does the previous year mean according to the section 3 of the IT Act? The financial year immediately following the assessment year, the financial year immediately preceding the assessment year, calendar year immediately preceding the assessment year, or the calendar year following. So, when we are filing the taxes, we need to select the assessment year. Assessment year is the year in which we pay our taxes. So right now, all of us filed our ITR. So it was for the assessment year 2025-26, and the taxes were paid on the income that we earned in the financial year 2024-25 from March 2000 from April 2024, right? From 1st of April 2024 till 31st of March 2025, the income that we earned, we paid taxes in the assessment year 2025-26. Financial year is the same as previous year. So it is the year immediately preceding the assessment year. Financial year immediately preceding the assessment year. Now, in the current budget, the whole concept, the terminology has been changed. It will be changed from the next year. The tax year will be included. All right, so the correct answer is B. Financial year immediately preceding the assessment year is known as the previous year. Zenmart, a leading e-commerce platform, advertises a new range of eco-pure air purifiers, claiming that these devices eliminate 99.9% of airborne pollutants through a patented filter technology. However, consumer watchdogs discover that the purifier uses standard filters widely available, not uniquely patented. In another instance, Zenmart lists an expensive limited edition watch smartwatch for 20,000, declaring only 50 units are available. Later on, it was revealed that more than 5,000 units were sold at the price, contradicting the exclusivity claim. A group of dissatisfied buyers filed a legal complaint, arguing that they were misled by the scarcity marketing. Zenmart's purifier advertisement violates section 247. Does it violate or not? So we are talking about the Consumer Protection Act. Consumers are protected against unfair trade practices, misleading information, or any unfair trade contract. So here this was a unfair trade practice. They falsely claimed a patented technology constituting a deceptive marketing. This was the first thing. Um, so yes, it is violative of the section 2 subsection 47 in both the cases actually. In the first case, the EcoPure air purifiers, they said that it is a unique patented technology, but in reality, it was a standard filter, nothing specific, nothing new. In the second case, also, they gave misleading information. They just tried to more, sell their units at higher prices, stating that it is limited edition available only for a particular duration and the units are going to finish, but in reality it was not there. Okay, which of the following statements correctly describe the concepts of common seal and corporate veil under the Companies Act 2013? So the companies, they require certain conditions, right? The minimum directors, the minimum members, maximum shareholders, like this. Similarly, there's a concept of common seal. The company, it is a corporate legal entity, separate legal entity, separate from its owners, right? But it cannot sign on its own signature. It is not a natural person. So a common seal was there. Now this has been removed. It is not mandatory any longer to have a common seal. There's a requirement that the directors or the managing directors, they can sign it. So, which of the following statements are correct? And corporate wheel basically means the people who are in front managing the company or showing as the directors of the company are different from the decision makers of the company. So, the use of common seal is mandatory for issuing the share certificate. Corporate wheel may be lifted by courts in cases involving fraudulent. Yes, the corporate wheel, when the courts want to know which people were involved in taking this decision. Let's say the company was involved in insider trading. So the court wants to know the responsible person. So yes, it will be lifted. This is known as piercing of the corporate veil. A company may be held criminally liable despite being an artificial person. These are the people involved in the criminal misconduct will be held criminally liable. Yes, so this is also correct. The corporate wheel, however, applies strictly, cannot be pierced unless provided no. It can be pierced by the court if the company is involved in some fraudulent conduct. So the correct answer should be 2 and 3. Yes, 2 and 3. The company can have civil liability, it can have criminal liability also. So there's the whole concept of MOA, AOA, the constructive notice, doctrine of constructive notice, the indoor management, everything that relates to this topic. And the questions are extremely important. Okay, so question from the article of association. The AOA of MNO Limited restricts the managing director from entering into contracts exceeding rupees 1 crore without prior board approval. Despite this, the managing director signs a supply contract worth rupees 2 crores with Z Corp. The board later denies liability, stating that the managing director exceeded its authority. Z Corp claims it assumed the managing director had the power to do so. There were no suspicious circumstances. Which principle is more relevant? See, one principle tries to protect the company from the outsiders. That is the constructive notice, basically, right? Something within the powers of the company is intra vires, something beyond the powers is ultra vires, right? So protecting the company from outsiders. Another doctrine is protecting the outsiders from the mismanagement, from the internal mismanagement. Both the things are there. So basically the AOA and MOA, these are public documents, and it is assumed that every person who is entering into a contract with the company has not only read but also understood each and everything which is given in the MOA and AOA. All right, but if let's say the AOA said that the managing director is going to enter into the contract with the board approval, the person, the third party entering into the contract, they've read the AOA and they assume that if the managing director is coming into the contract, obviously they have the board approval. Now, about any internal mismanagement, irregulation, the third party is not liable. All right. So the principle most relevant here is the doctrine of indoor management, which protects the outsiders from the internal mismanagement. All right. I entered into a contract with the managing director, assuming I have read the AOA. So I will obviously assume that they have taken the board approval. If they do not, and later on the company claims that no such thing was there, it is their problem, not the third person's issue. But if the AOA or the MOA says that the managing director is not allowed to enter into a contract exceeding 1 crore rupees, not allowed. Still the third party comes and gets a contract signed. Now the third party will be responsible. This is the doctrine of constructive notice, which protects the insiders. Right now, they can claim that very clearly it is mentioned in the MOA and AOA that the managing directors are not allowed to enter into contract. So why did the third party in the first place agree to be a party of the contract? All right, so these are the doctrines and these are related to the MOA and AOA. MOA contains the name clause, the registered office clause, the objectives clause. These things are the basics, the founding stones of the company, right? AOA is about the management of the company, the powers given to the managers, the internal regulations of the managers, that is AOA. Both of them are public document. All right, so these type of questions will be asked in your exam. MCQ statements, case studies, numericals are not there. Okay, and starting from tomorrow 9 p.m. on a daily basis, we'll be practicing questions. We'll be going module wise, unit wise, and we'll be having around 20-25 live sessions to practice all the questions. Okay, and it is going to be live. You'll be getting the recorded sessions also. So if you miss the class due to any reason, you can watch the recorded version and you can download the PDF for your revision. All right, so those who haven't yet joined, those who are there in the super elite plan, you'll get the access to this course. You'll also get the recorded crash batch lectures. Okay, so subscribe now, enroll now, and attend all the live classes. Answer the questions actively. If you have any doubts, any queries, you can ask me in the live session. So tomorrow we are going to start with our module A. That is all from my side. This is going to be our strategy for the next 20-25 days for our BRBL paper. Similarly, for your all other papers also, compulsory papers, the classes will go on. So I hope everything is clear. If you have any doubts, any queries, any questions, then you can ask. Otherwise, we'll end the session. Okay, so everything is clear. Great. Thank you so much for attending, and I will see you in the live classes tomorrow. Good night, take care, and all the best.